I'll be showing you the best way to earn income on your cryptocurrency. So take a look at this wallet right here. They have about 92,000 bucks in liquidity. And if they were just holding on to their crypto assets in the market, not being deployed into liquidity pools, they would be at a loss because their assets had depreciated. But since their assets have been in liquidity pools, they have earned income and they're sitting at a profit. So this goes to show the beauty of liquidity pools. We can take a look at this wallet here, about 6.7 million bucks in liquidity, and their assets only rose about 6,000 bucks. But since they're in these liquidity pools, they have made $150,008 in earnings. If you're unfamiliar with this business model and how you can make money with it, let me explain. So there's decentralized exchanges like Uniswap and Orca, and they're places where cryptocurrency traders go to swap one asset for another. So say a trader wants to swap ETH for, let's just say, Tether, USDT. Say they want to swap 3 ETH for Tether. Well, look, they're going to have to pay a fee. So going here, we can see, let me zoom in, we can see that they'd have to pay a 0.25% fee. In this case, it would be about 20 bucks. But what's cool is that part of this fee gets paid out to the people that are actually providing liquidity to Uniswap, allowing the trade to take place in the first place. Because think about it, if there's no liquidity, then the trade can't take place. So liquidity providers are crucial. The business model is pretty cool because it can be a win-win for everyone. The liquidity provider is providing liquidity for the decentralized exchange, so the decentralized exchange is happy, and then the trader is able to make a trade, so they're happy, and then the liquidity provider again is happy because they're getting paid out in fees. So how can we go about finding these opportunities? Well, of course, we could go to Uniswap, go to view positions here and scroll through the opportunities. We could also go to Orca, click the pools button and scroll through some pools. But look at this. For example, if I click on this JLP to USDC pool, we can't see much information about it. We can pretty much just see the estimated yield per 24 hours based on the past 24 hours of data. We can't see much else. We can't even see how correlated the assets are to each other. We can't see our estimated monthly or yearly earnings, etc. So that's where the software Metrix Finance comes into play. It's the best software for finding liquidity provision opportunities, also simulating your returns to see what type of money you could be making on your cryptocurrency assets, and then building out your portfolio. And in the description below, I'll leave a link to claim a trial to the pro version of Metrix Finance. I definitely recommend you take advantage of that link I'll leave for you guys. So go to the top right, I'm going to hit launch app, and then we'll go to the discover section. So we can select some exchanges and networks we want to look at. For the sake of this video, I'll just select a few. We can look at Uniswap, Orca, Radium for now. And then networks, we can look at Ethereum, we can look at Base and Solana. Now it's showing there's about 1,798 pools to sort through. That's a lot. So we got to filter them down. So I'm going to go to fees APR and let's look for pools that have higher. And let's just say 14% fees APR we can go with for the sake of this video. And then for TVL, we can look for pools that have higher than 3.5 million bucks in TVL. Of course, I want to look for pools that have at least millions of dollars in TVL so they can be showing signs of somewhat consistency and long-term potential. And then now we're down to about 146 pools to go through. Scrolling down, we see some pretty blue chip positions like wrapped ETH, USDC, wrapped ETH to wrapped Bitcoin, but we also see some meme coin positions with outrageous APR. I'm not going to pay attention to these positions. Yes, there's stories where people are making profit from these positions, but I'm not going to pay attention to them. I'm going to look for positions that have more solid assets in them. So we can go to the second or third page. We can see here we have wrapped ETH to link. We can go ahead and hit the simulate button in a new tab and go more in depth into this position. We can see a ton of information about it. First of all, we can add a deposit amount. We can see what type of money we could be making with a certain deposit amount. So I'm entered 10,000 bucks. Then I'm gonna scroll down and go ahead and select my range. First, I'll change my calculation range to use the past 20 days of data to try to get a better simulation. Then I'll change the max price and min price a bit, just as an example for this video. And with this current min price and max price, we're looking at about 103% yearly APR. That's solid. And with a $10,000 deposit amount, the estimated fees per day in earnings would be about 28 bucks. Remember, there are risks to this investing, such as divergence loss. I'm not a financial advisor. I'm just telling you my opinion. Scrolling down, we can see the correlation of these assets. These assets are about 99% correlated. That's really high and really solid, almost 100% correlated. And this correlation feature is one of my favorite features of Metrix Pro, as well as this calculation range feature. I love being able to zoom out on my calculation range and see the pool price based on the past 100 days of data or 120 days of data or even the past 7 days of data. I'll leave it at about 20 for now. Scrolling down, we can see the volume history. We can see the daily fees and volume. This is really important to look at when you're evaluating whether or not you want to take on exposure to a liquidity pool or not. So from here, the next steps would be to look into these assets, Link and Wrapped Ethereum, see if you want to take on exposure to them, see what role they play in the DeFi ecosystem, and if you want to take on exposure to them, you can save it to a portfolio for later. Make sure to subscribe and hit the notification bell so you don't miss an upload, so you can stay informed about the world of DeFi. Going back, we can look at some more positions. We can look at USDC Sol. That's showing very high APR, but the thing is, when we simulate it, it's probably going to be pretty skewed. Let's see. Yeah, the volume history is showing crazy volume and crazy fees on the days Trump launch his token. So if we're simulating the USDC to Sol position, I'm probably going to want to filter out these days. So this is where the calculation range comes in handy. Instead of using the past 30 days of data, I'd probably want to use like the past 23 days of data or something, or 21 days of data to filter out those days. So now we're probably getting a more realistic APR. See, it was showing like 140% before. Now it's showing about 96%. But anyways, we can go ahead and change our range. And look, we're getting weird numbers from min price. It's 0.003, 0.006. So let's go ahead, swap the order of these assets. Now we're seeing easier to read numbers, like 159.7, 262.05. So now with this min price and this max price set here, we're looking at about 106% APR, or about $29 a day on the $10,000 deposit amount. And this is according to the Metrix simulation. So we can scroll down again, look at the volume history, fees history, and see how correlated the assets are. Solana and USDC are not going to be correlated at all, really, because think about it. USDC is designed to not move. It's supposed to be a stable coin, and Solana moves. So if Solana goes up by $20, USDC shouldn't move. So the correlation range should be very low, no matter what calculation range we're looking at. See, based on the past 63 days of data, it's showing a very low correlation as well. So if we want to deploy into Solana and USDC in this liquidity pool, we can go ahead and save it to our portfolio for later, but we can look for some more higher APR opportunities. We can go to fees APR. Let's look for pools that have higher than, let's just say 65% APR. I'm going to go back over to the first page again. Scrolling down, I see Wrapped ETH to move. Now it's showing about 407% APR. That's very high, with about 13 million bucks in TVL. So we can go ahead and simulate it in a new tab. Now scrolling down, we can check out the volume history quick. This is a good indicator to see the longevity or consistency of a pool. Look, we're having days with very low fees and then days with insanely high fees. Look, $105K in fees on this day and $394 on this day. So this would be a pretty red flag for me. I'm going to close out this position. I'm not going to enter it. We can go ahead and check out Ondo to Wrapped ETH showing 140% APR. Let's see if we have a similar story or not. Let's see. Okay, so we're having a lot more consistency in the fees. So now let's check out the position. I'll add my sample deposit amount and then I'll scroll down and let's find a range here. I'm going to swap the order of the assets first. Okay, we can find a range. One thing I do notice is these assets are not very correlated. It's showing about 7% correlation. So that's definitely something to keep in mind when you're looking at this position. But anyways, it's showing very high APR, which is sweet. It's showing about 188% APR. And we can move our calculation range to try to get a more accurate simulation. Now it's showing about 196% APR. Now I believe I've seen Ondo coin before, but I don't know what it is. So if you're in a similar situation when you're looking for these DeFi positions, you see a position but you don't know what the coin involved is, you can go ahead, copy the coin, go to CoinGecko, paste it in the top right, and then find it. Now when you're here, you can see information about the coin. You can see it has over a $4 billion market cap. You can scroll down, go to the website, and start reading about it. You can see what role the coin plays in the DeFi ecosystem. You can try to read about the team behind the coin and see if it's something you'd want to take on exposure to. Checking out the website of the coin along with the CoinGecko is just one of the multiple ways you can do your due diligence into the coin. But anyways, when we're using a 20-day calculation range, the correlation did go up a bit. It's showing they're about 49% correlated, not insanely low. So if you want to take on exposure to Wrapped ETH, Ondo, and enter the liquidity pool, you could hit save to portfolio, and then later on you could go ahead and go over to Uniswap or whatever exchange the pool is on and then enter the pool. Remember to check out Metrix Finance. Click the link below to claim a trial to the pro version of the software. It's the best software for finding these liquidity provision opportunities, simulating your returns, and building out your portfolio. Anyways, I hope you enjoyed something in the video. I'll see you in the next one.